Alright, let's dive into something that's been bubbling up in the Forex world lately. The Australian dollar to Japanese yen pair. Now, if you've been keeping an eye on the markets, you've probably noticed that this pair has been softening, hovering around the 111.00 mark. But what's really going on here? Personally, I think this isn't just about numbers. It's about a much bigger story involving central banks, global strategies, and market psychology. Let's break it down. First off, the Japanese yen has been in the spotlight recently, thanks to a coordinated intervention by the US and Japan. This move isn't just a random act, it's a strategic play to stabilize the yen, which has been under pressure. What makes this really interesting is the timing. Japan's Finance Minister Satsuki Katayama has made it clear that they're not done yet. They're ready to take further action if needed. This raises a deeper question. How effective can these interventions really be in the long run? History tells us that a single intervention rarely changes the trend permanently. So, is this just the first step in a broader strategy? I'd argue yes, and that's what's keeping traders on edge. Now, let's talk about the Australian dollar side of this equation. Australia just posted a surprise trade surplus in June, thanks to a jump in commodity exports. On the surface, this should be bullish for the AUD, right? But here's where it gets tricky. The Australian dollar to Japanese yen pair is still trading in negative territory. What this really suggests is that the yen's strength, driven by intervention and safe haven demand, is outweighing the positive news from Australia. It's a classic case of one currency's strength being another's weakness. From a technical perspective, the Australian dollar to Japanese yen chart is painting a bearish picture. The pair is trading below the 100-day SMA and the Bollinger Middle Band, which are key technical barriers. The Relative Strength Index, RSI, is sitting at 38.81, indicating subdued momentum, but not yet oversold. One thing that immediately stands out is how tightly capped the upside is. To ease the downside pressure, the pair would need to reclaim the 112.80 to 112.90 zone. But here's the kicker. Even if it does, the path to 114.67 or higher looks challenging. On the flip side, a break below 110.15 could open the door to 109.24, or even the psychological 100.00 level. What many people don't realize is how critical these technical levels are in Forex. They often act as self-fulfilling prophecies, because so many traders are watching them. Now, let's zoom out for a broader perspective. The yen's recent strength isn't just about intervention. It's also tied to the Bank of Japan's shifting monetary policy. After years of ultra-loose policy, the BOJ is gradually tightening, narrowing the yield differential with the US. This is a big deal because it's reversing a decade-long trend that favored the US dollar over the yen. In my opinion, this is one of the most underappreciated stories in Forex right now. It's not just about interest rates. It's about the yen reclaiming its safe haven status in a world that's increasingly uncertain. So where does this leave us? Personally, I think the Australian dollar to Japanese yen pair is at a crossroads. On one hand, you have the yen's newfound strength, backed by intervention and policy shifts. On the other, you have the AUD's fundamentals, which aren't bad but aren't strong enough to counter the yen's momentum. If you take a step back and think about it, this pair is a microcosm of the broader Forex market, a battle between central bank strategies, economic data, and market sentiment. Here's my closing thought. The Australian dollar to Japanese yen story isn't just about a currency pair. It's about the evolving dynamics of the global economy. Are we seeing a new era for the yen? And if so, what does that mean for other currencies? These are the questions I'll be watching closely. What do you think? Let me know in the comments below. Thanks for watching, and don't forget to hit that subscribe button for more insights like this.